It's time for 3 versus Trish, and today we are taking on a stock that has seen its fair share of drama, Yahoo. CEO Scott Thompson stepped down this weekend amid questions over his resume, changing the game for investors yet again. So how do you navigate these choppy Yahoo waters? We've got 3 ways for you to trade it right now. Joining us right now is our very own John Ehrlichman, covering the fundamental side for us. Peter Lee, Chief Technical Analyst at UBS on the charts. Andrew Keene, back with the options take. Great to see all you guys. John, first of all, your overall thoughts on Yahoo in the wake of this news.
You know, despite all the chaos surrounding this company, the financials themselves, Trish, are pretty calm. This is a company that consistently has more than $1 billion in revenue every quarter. Their last quarter, their sales were up for the first time in 3 years. I mean, so long as they can get their fair share of the advertising dollars, they're doing okay. In the near term, though, there are a couple of big catalysts for the stock. Obviously, what they decide to do with their Asian assets is a biggie. They're in the middle of a patent fight with Facebook, so if they were to settle that, that could be a mover for the stock, too. Longer term, though, there's still this question of whether they're a media or a technology company. And the importance there is that if they are more like a media company, remember, traditionally, they've made their money offering the technology that delivers content. They're not like CBS. And if they're going to stay in the technology game, well, Facebook and Google are awfully mighty when it comes to mobile and social, the 2 biggies these days, and Yahoo is far behind there.
Well, John, do they need to make that decision? I mean, whether they're a media or a technology company, is it tough to be in both spaces?
I think when you're so big, and Yahoo is a biggie, and that's partly why they've been cutting costs, why they've got so many different product lines, and you've got a new CEO who's more from a media background versus Scott Thompson, who was more the product guy and pushing a few new products. They absolutely have to make that clear. And they have to make it clear, too, to all the people who work on teams like Yahoo Mail and Yahoo Finance and Messenger, all these areas where people don't feel like they're really inspired to work hard, that I'm sure Facebook's interested in.
Lots ahead. Okay, from a technical perspective, Peter Lee, where's the stock going?
Yeah, the stock is actually too calm, we believe. So we ran some studies on what we call the implied volatility or the Bollinger Band, and it suggests to us something major is about to happen on Yahoo. So breakout situation, 15 3/4 takes you upwards to 16.5, possibly upwards to 18.19. Breakdown on the stock will be below 14.25. That will take you down towards as low as $11.
Okay, so you're betting it could go either way. Andrew Keene, from an options perspective, what are you seeing and what are you doing?
I mean, I definitely disagree with Peter. It's stuck in a range. It's just like Sprint. It's stuck between 14 and 16. It's been in this range for such a long time. No catalyst that I can see going forward is actually going to make Yahoo break out of this range. So I sold the June 16-17 call spread. I got 25 cents for this. I'm risking $75 to make $25. Excuse me. And I think that Yahoo is stuck in a range, and unless they put up themselves up for sale, they really got some problems. They have an identity crisis. I feel like I'm always on the show and I'm like Debbie Downer here, but they do. They have an identity crisis. This is their 5th CEO in 5 years. They really got to figure out what they do, and I totally agree with John. They have to figure out what they want to do. Do they want to be technology? Do they want to be media? Do they want to sell themselves? What are they going to do with their China assets? What are they going to do with Alibaba?
We shall find out.